Ladies and gentlemen, welcome back to the Vietnam Forum 2019. It is now time for the final panel today, which will dive into the real estate sector in Vietnam. This panel will be moderated by Dr. Francis Hutchinson. Mr. Ninh Văn Hien, Mr. C.K. Tong, and Mr. Trần Quoc will be the speakers of this panel. Without further ado, Dr. Hutchinson, please.
Thank you very much, and welcome to the fourth and final panel of today's event, where we will be looking at the real estate sector. This is a vital area for Vietnam's economy, and it is also one of key interest to Singapore, where there are very deep levels of expertise among key players, including in areas such as urban planning, industrial parks, and real estate more generally. The panel is designed to take us through the key axes of the sector, with presentations from both the private sector as well as from the government's perspective. Our first presentation is on Vietnam's housing market, and it will be given by Mr. Ninh Văn Hien, who is on my far right. He has more than 20 years of experience working in Vietnam, Hong Kong, and the UK, and he is currently a tax partner at KPMG Vietnam, and he is head of the merger and acquisition, tax, and real estate practice. Our second presentation will be on the industrial estate sector in Vietnam, but in the context of the US-China trade war. And just a sneak peek, there are some very, very interesting findings that we will be hearing about, and we will be seeing a very, very key impact of, indeed, the US-China trade war and its impact on the estate sector in Vietnam. And this presentation will be given by C.K. Tong on my near right. And he is the Chief Executive Officer of BW Industrial Development JSC, which is a for-rent industrial development platform. Mr. Tong has 30 years of experience in the industrial real estate sector, including as head of logistics management services with DHL Global Forwarding. And our third speaker is Chan Quoc on my left, who is the Deputy Director General of the Department of Economic Zone Management of the Ministry of Planning and Investment. Mr. Chan has more than 20 years of experience in planning and management of industrial zones. We were scheduled to have a fourth presentation on tourism and the hospitality real estate sector, but our invited guest, Mr. Mauro Gasparotti, is unable to join us today due to unexpected work commitments. This is a silver lining, as we have been a bit pressed for time today, so we can now allow our three speakers a very generous 20 minutes for their presentations. With this, if I can now invite our first speaker to take the floor.
I would like to think that the organizer do try to keep the best for the last. But obviously, it is a challenge, as this is the last section, how we can maintain the attention and interest from the audience. So let us try our best to deliver that. So my section is on Vietnam housing. So let me start with giving you a economic backdrop. Obviously, I'm not going into the big detail because you have spent the whole day listening to a lot of these data and macro, the market already. So I just want to pick out a few points that is relevant to the housing market. Obviously, Vietnam is a big country in terms of population, almost 100 million, based on this year's census survey. Urbanization at the moment is 34%. Expect to increase to 50% in 2040. So 20 years from now on, half of the population will live in the city and town. GDP, you can see almost 7%, and it's going very strong. Inflation, check, 2.5%. Mortgage, it looks a bit alarming for foreigners, 11%, but it is pretty normal for Vietnam. If you look at deposit interest, it's already about 7, 8, or even up to 9%. So borrowing for mortgage, 11% is normal. And throughout today, you have heard real estate is imminent sector attracting foreign investment in FDI. So 2018, based on the Ministry of Construction data, Vietnam attracted 334 billion FDI, and of which over 50 billion is in real estate. And recently, in the last 5 years, real estate is certainly always staying on at the number 2 highest sector attracting, whether it's FDI or M&A acquisition activities is in real estate. Okay, so again, just key snapshot about the market. If you look at the buyer, profile, then you have investor, occupier, and the speculator. So depending on the products, at the luxury end, grade A, you have more investor, buy to hold, rent out, and then maybe hopefully sell in the future for capital gains. Occupier buy in to live, and speculator just jump in, jump off, making quick gains. And you see the breakdown at the bottom level where it's affordable housing. Then people mainly buy to live. There's no speculator, some investor. And the pattern looks pretty similar for both Hanoi and Ho Chi Minh City, the 2 main market. Average price in Vietnam for per meter square, you are looking at in Hanoi is about 1,300 per meter square. In Ho Chi Minh City is more expensive, and the trend is going up, but not sort of massively, so it's stable. Here I just name a few big players, and I put them here just because I serve them. Most of them are my clients: Capital Land, Hong Kong Land, Keppel Land, Phu My Hung, a township developer. And there's emerging local developer. They're getting bigger and bigger on the right. So if you look at this cycle, the growth, the supply of the unit, the sale. So in 2014, in Ho Chi Minh City, if you look at, there's about 10,000 units sale. 2018, look at the growth. Similar pattern are seen in Hanoi. We break it down again to different grades of apartment, luxury, mid-end, and affordable. So the outlook, you have heard, is looking good. The economy is doing well, 6.87% growth GDP. With that big population and the current residential housing per person is still pretty low. There's a real need for residential housing development and market for many, many years to come. Vietnam, a couple of years ago, relaxed the foreign ownership for buyer, investor from overseas, Singapore, Hong Kong, Malaysia, getting a visa, coming to Vietnam, and buy a unit, make an investment there. So it's more relaxed policy. Still, they can only own it for 50 years and renewable. There is a big noticeable increase in foreign direct investment in residential market. Traditionally, it has been more of Singapore, Korea, Hong Kong, Taiwan, Malaysia. But lately, we see a massive, big influx of Japanese in the housing market. The Chinese, mainland China also come with many players. Some sort of challenge that we can see. There are currently, there's a limited supply of projects. So for the some years to come, there will be problem with project formation, acquisition. There's difficult to access good land in good city, in Ho Chi Minh City, Hanoi. You just don't have access to this. You may have heard of the anti-corruption initiative undertaken in Vietnam, modeling what is happening in China. And again, I would say real estate market is, particularly in residential housing, maybe the number one target for these crackdown. So even in Ho Chi Minh City now, many projects are stalled, stand still, or subject to government inspection with regards to possible wrongdoing in the past, how they acquire, how they obtain the projects. So many of that is standstill. Project transfer is almost also standstill. No approval given because the government officials are a little bit nervous with what's going on. So that's a practical issue. We just don't see new project coming to the market. We don't see project being transferred. So it is, so for many years to come, the next 3 and 5 years to come, we see that there is a problem with supply. And the increasing number of players, foreign direct investment coming in and looking at real estate, there are just not enough projects for them to participate, to invest in, to buy. So it is really a seller's market now. With any decent project, one project, there may be 5, 10, 20 people going after that single project. So the price obviously shoot up, quite a challenge. The other challenge we have, Vietnam, we have currently, it is still considered in the real estate housing market, forming the project, doing the project, still suffering a lot of bureaucratic inefficiency. There's also financing difficulties because you heard from the presentation on the banking. There's a control, there's a government regulatory control on credit growth and the percentage what you can lend to real estate, residential housing projects. And also we mentioned today, infrastructure is lagging behind. When you build housing development without proper access road, without sewage, without school, without, it is a problem. So I quickly moving on to the regulatory issue. So residential housing market is a conditional, it's defined as a conditional sector. But it's not a very restricted conditional sector. I guess it's like everywhere else. It's subject to government planning, zoning, approval. So if your project, if you want to do a project within the already master plan zoning, then that's it. It's a conditional sector there. And for foreign investor, you need to set up a local project company in order to own the land and the building, the development. Interestingly, there is no restriction on foreign ownership of the development company. So it can be 100%. There's some restriction, I mean, there's some requirement on minimum charter capital, which is equity, investors' own money. and depending on the size of the project, which is not very difficult to overcome. Overall, I would say that it is heavily regulated with many cumbersome approvals and permits needed to do a housing projects, to get involved in residential development projects in Vietnam. Very challenging for foreign investors. Problem is many processes, many compliance and approval needed, but it's not always transparent for people to follow. So creating a real challenge. And then as a practitioner, I do see that there are still differences in the market. The practice is the same law, same regulations throughout the whole country. But the practice now in Ho Chi Minh City and in Hanoi, or from province to other, can be different. So players tend to stay in one market. So many players may just stay in Hanoi or may just stay in Ho Chi Minh City. You start seeing people moving out, doing both projects in both markets, but it's still not common. So for example, like Capital Land, been in Vietnam for 25 years. The main market is still in the south. They have a few projects in Hanoi, but they're still a major player in the south. Phu My Hung started in the south, but they now start spreading out. VSIP started in the south, but also starting spread out with regards to their housing market development. Okay, so how do you set up, how do you get involved in doing a project in Vietnam? So here I set out the three ways of getting involved. The first one is 100% for the loan. This is not common. You can do it, and there are people doing it, but obtain the land directly from the government, leasing the land from the government, getting involved in land compensation and clearance by foreign investors are kind of like no-go area. So it's extremely uncommon for 100% foreign-owned company to do a housing project starting from scratch. That leads to the vast majority are in the form of joint venture, where the local partner take care of access to land, acquiring the land, and put in the joint venture. Foreign partner put cash, expertise in develop it. So the middle one, joint venture, is still now by far the most common form of setup in Vietnam. More and more so now, where on the right, where M&A come to take place, foreign investor not taking the first, not taking the second, going in, buying local companies, buying projects belong to local companies. So these are more of M&A activities, and it's allowed. So a local project, 100% local owned, sold, transfer, most common by share deal. But project transfer, so the company owning the project can sell the project to the foreigner after they create a project company, is also allowed. But less common, share deal, taking over, is more common. So I quickly cover the financing and taxation of doing a real estate project, a residential project in Vietnam. There is no thin cap rule in Vietnam, but generally all of those projects with foreign investment, you need government approval in the form of investment license. And in the investment license, they put down the equity as well as debt financing. And equity tend to be around 30% of the total investment needed for the project. Anything below that the licensing authority may question, challenge, and ask you to increase it up to 30%. Lately, Vietnam technically banned or stopped cross-border lending into residential projects. So basically, under the housing law, the sort of loan capital is limited within the credit institution and financial institution currently operating in Vietnam. So you can borrow from local banks. You cannot borrow from overseas. That's what the law say. Practice, it is still, we still observe that shareholder loan coming in. Once they register with the State Bank of Vietnam, they get the approval, they finance it. Because as we mentioned earlier, having access to the local financing is not always easy because the bank is subject to the credit limit. Inter-company loan is technically questionable, but again, is very common in practice in Vietnam, between the company in Vietnam, and even in the listed company, loan between companies are common. Okay, Vietnam allow developer to collect deposit advance from buyer, provided that the project development reach a certain stage. When you finish the foundation, then you can launch, you can start sign the sale purchase contract. Foreign company can obtain 50% of the value as a deposit, progressive from the buyer. Local developer can collect up to 70%. Capital recycling, a real estate project, typically housing development, unless it's a township, it's just a couple of blocks. Timing may be quick, short, 3-5 years. And currently we have a practical problem of when you finish, you sell everything. You pay dividend, all done, but you are stuck with the capital that you originally put in. And you can only get it out by liquidate the company or try to get capital reduction, both of which are case by case, is not a straightforward exercise. My last slide is on taxation, just to complete the picture. You heard this morning from Fredberg, standard corporate income tax is 20%. That's the highest standard rates. When before you hand over, before you recognize revenue, but you already collect advance deposit from buyer, you pay a provisional corporate income tax, which is calculated at 1% of whatever you collect. It's not real tax, it's a provisional tax. VAT, like GST in Singapore, 10%, but not on the land value. This is assessed on the buyer. VAT refund is no longer allowed. Used to be allowed in the past, but then now for residential housing project, couple of years when you develop, build, you accumulate VAT before revenue, no refund. When you make profits, you send money home. After paying 20% tax, there's no further withholding tax, no dividend withholding tax. Even if you pay within Vietnam to the parent's company, that is not subject to further tax. So it's quite good. Individual buyer, subject to stamp duty, which is 0.5% of the value, which is reasonable, and cap at about $22,000 roughly. So you can never pay more than $22,000 for stamp duty. And when you sell the property, when you exit, as an individual, you pay 2% on the sale proceeds. It's very simple, just 2%, whether you make profit or loss, still just 2%. So they keep, tax is very simple. So with that, timing is good. I conclude my presentation, and I'm happy to take questions subsequently. Thank you.
Thank you very much, Mr. Ninh, for that very, very useful overview. If I can now invite our second speaker, Mr. Tong, to take the stand.
Good afternoon, ladies and gentlemen. Who's BW? I don't suppose there are too many of you who knows about our company. And when my colleague prepared these slides, I was kind of upset they didn't do any advertising for us. I don't get an opportunity to sell anything here at all. So I thought that maybe I'll just flip quickly to the last two slides where it talks a little bit about us to start off. There you go. So this is us. This is a joint venture between Warburg Pincus and Bakermax. Bakermax, incidentally, is the majority shareholder of Vietnam Singapore Industrial Park. Ninh here have mentioned about VSIP. Currently, there are about 9 VSIP in Vietnam. Warburg Pincus, obviously, one of the largest private equity based out of New York. So this is where we are. We have quite a huge footprint in Vietnam. All the land that we have acquired are all in industrial park. By first quarter of next year, we will probably have about 400 hectares. Incidentally, the company only started March last year. Gives you a sense of how the trade war have speed things up. Okay. So now I'll go back to the presentation. Sorry to bear with me a bit. Okay, here you go. Now, I think we are all very familiar with this change of events, so I'm not going to spend too much time on it, but essentially what it means is that, you know, close to what, $350, $400 billion of goods are being put on tariff, and this represents quite a bit of manufacturing activities that needs to be addressed from China. The top 10 countries most affected by this tariff war we saw a lot of this morning as well. So again, we'll skip that. But I guess what it's interesting to also take a note is, you know, the types of products that are being affected. And we hear about some of the presenters this morning about, you know, Vietnam government wanting to look at higher up in the value chain. Some of these products are actually something that they look for. Now over here, this is a very meaningful chart here. If you look at the red bar, we're talking about the number of projects. I think we talk about this. There's some of the presentation this morning also talk about there's an increase in the number of projects of FDI, but decrease in the size or the value of it. So I think largely it's really because of the number of SME that is coming into Vietnam, and many of these are actually manufacturer. It's a pretty substantial increase of manufacturing FDI into Vietnam, and this again, you know, illustrate a huge demand of industrial space in Vietnam. The types of products, as you can see, textile and garment traditionally have been the kind of products that have been popular in Vietnam, but increasingly we are seeing electronics products, components, furniture, machineries. One of our customers or tenant are actually into semiconductor back-end operation. So there is a very, very positive signs in terms of the types of industries that are going into Vietnam. Added 8%, contributed 8% more to the GDP. I think that data was shown this morning. Now this, again, is something that is interesting because of these influx of manufacturing activities. You can see that the occupancy rates of all the industrial property, both in the north and the south, are post 80%. That's pretty substantial right there. And over here are the northern industrial focus. The Bắc Ninh area here, this is where the likes of Samsung, Foxconn, electronics manufacturers are. One of the most popular and high demand area over here. There's a lot of automotive folks here in the Hien area. Haiphong is a favorite spot for enterprises that are going for 100% exports. And the biggest conglomerate in Vietnam, Vingroup, has a huge plant in this area. They are producing both car and smartphone. Okay, this is just an indication of all this demand, as you can see, in terms of the increase of occupancy, and very importantly, the land prices. Bắc Ninh, as I mentioned earlier. Haiphong. The Southern Economic Zone is just as important, if not more. Until today, I think it's still one of the top 3 destinations for FDI going into Vietnam. And among them, Ho Chi Minh City have always been the one that is ranked number 1. There's no indication of the increase of the rental price here, but I can tell you the selling price in around Ho Chi Minh City have gone up in triple digit in the past 18 months. This is Bình Dương. This is where we have most of our footprint. As you can see, there is a 54.6% increase in rental property. That's pretty scary numbers. Dong Nai, the up-and-coming province, in my opinion. It's in a much better locations than Bình Dương, closer to all the future infrastructure such as the airport being built here, closer to the deep sea port here, and the current largest intra-Asia port in Ho Chi Minh City. Long An, in my opinion, will be probably playing a role in the next 24 to 36 months as soon as the capacity in both Dong Nai and Bình Dương are being taken out, which I foresee is going to happen very soon. Okay, now, if I may just very quickly sum up, what's been happening, because the topic is about what happened to the industrial real estate because of the trade war. As you can see, the key thing here is that we are really seeing escalation of industrial property prices, and given that the availability of land is only going to stay constant, so what we are anticipating is that you are going to start seeing buildings to go multi-stories. And you are also going to start seeing that the cost of productions and manufacturing in Vietnam continue to rise. So is this a good news or bad news? I'll leave it to you for you to decide, but it's definitely not going to be all rosy. And there is a real challenge here for the government to look at how to mitigate this risk before it gets to a point where it would discourage manufacturers for keep coming to Vietnam. But on the bright side, we believe that even with an escalating cost, there are still good enough reasons for investors or manufacturers to continue to look at Vietnam as a destination for manufacturing. Mostly we believe in this. In the past 10 months or so, we have leased out a total of about 250,000 square meter of factories to many of the tenants who have shifted their operations from all across the world, although predominantly China. And in addition to the fact that trade war is one of the reasons that drove them over to Vietnam, there is a very strong belief that the number of FTAs that the Vietnamese government are signing with the rest of the region is also opening up the market for products being made in Vietnam. And there's another reason why this investors or manufacturers look at Vietnam is because of Vietnam actually as a location can be looked at as a gateway to Indochina. And of course, we learn about all that young labor force and whatnot, right? And this is just our internal data. Right after the trade war, the inquiries that came to us increased by 300%. Okay, so that's the end of my presentation. I still have quite a bit of time left that I'll leave it to the next presenter. Thank you.
Thank you very much, Mr. Tong, for your exceptional time management. We're actually in surplus. If I can now invite our third and final speaker to take the floor.
Thank you very much for Mr. Moderator, and good afternoon, ladies and gentlemen. Now, I would like to present my presentation regarding to the industrial park in Vietnam. In this presentation, I will present some latest information regarding to the industrial park development and some policy regarding to the development of industrial park and some orientation for the next 10 years of the industrial park development. So let's start with the beginning. We first established the export processing zone in 1991. From the nearly 30 years, we already passed through the 5 stages of development of the industrial park from the 1991 up to now. With it, within these 5 stages, we shifting from more centralization to the localization of the investment, and we are also increasing the domestic investment in the IP infrastructure, and also focusing more on the quality and environment protection and some other issue regarding to the social security for the worker and for people working in the industrial park. And right now we also more diversify the model of the industrial park development. Up to now, we already have around nearly 330 industrial parks in Vietnam, with a total area nearly 100,000 hectare land, up to the 6th June 2009. And you can see our industrial park located around 61 provinces in Vietnam, but most focused on the Red River Delta and Southeast, where we have the big 2 cities, Ho Chi Minh City and Hanoi. Around 2/3 of the all total area of land is located in these 2 regions. our industrial park already received quite a lot of the domestic investment, nearly 7,400 domestic projects with total capital of around nearly 36 billion US dollar. But comparison with the foreign investment, we have much more. We have around nearly 8,500 foreign investment already in industrial park with the capacity of investment nearly 135 billion US dollar. It's around 3 times bigger than the domestic investment in industrial park. And for the industrial park, we already received about nearly 3.3 million workers working in the industrial park. It accounts for nearly more than 34% of the total manufacturing worker working in the whole country. And for the export, it contributes around for more than 53% of the total export volume in Vietnam. And especially, it also contributes for the state budget around nearly 4 billion US dollar. Even with some latest development of the industrial park, we're still facing some issue. The first one is not fully 100% of the industrial park already have complied with the environmental protection law, because we still have around more than 12% of the operating industrial parks still haven't got the wastewater treatment facility, and some also create some negative impact on the environment of the people living nearby. And we, as Mr. Anh mentioned, we also have some linkages among the enterprises located within the industrial park, so that this issue we should have to deal with in the next 10 years. And another issue is regarding to the living condition for the worker. Also, we have to deal with, because right now the good quality of house just meet for the 30% of the worker in the living in the working in the industrial park, and we also lack of the capital investing in the disadvantaged area, like the rural or the remote area, so that we also need to deal with this issue as well in the next 10 years. And another thing is facing with the industrial park is also we have the shortage of the high skilled worker for working in the industrial park. And we also have some labor issue, like for example, labor dispute, or the enterprises cannot fully comply with the labor law code. Like for example, cannot contribute enough for the social security, or paying much attention for the worker. Maybe can work higher than the normal time. And as other speaker already mentioned, that we still in the process of revising a lot of law, so that we still facing a lot of difficulty in the law, like for example investment law or enterprise law or something like that, so that we also need to revise regarding to this law, so that we can make our business environment much more better for the investor. Maybe something wrong with the presentation. Um, so for the So regarding to the policy for the development of the industrial park, over the last nearly 30 years, we apply quite a lot of policy in order to encourage the investment into the infrastructure, as well as the calling for the investment into the industrial park. And as Mr. Tong already mentioned about some advantage of investing in Vietnam, but in the industrial park we also have some another advantage, like the administrative advantage, and the another thing is the infrastructure. And most of the important thing is we can provide the time saving for the investor, because that whenever they invest in the industrial park, they don't need much time for the administrative as well as the land clearance. It's very time consuming in Vietnam. And for the investment incentive in Vietnam, we apply for from different law, like investment law, the corporate income tax, import tax, and another is land law, so that we apply with the different criteria. First is it belong to the area, and the secondly it maybe belong to the sector, so that industrial park located in a difficulty area maybe receive a higher incentive tax or the income tax. So in this table, I summarize some corporate income tax apply for the investor invest in Vietnam. So maybe it can apply for the new investment as well as the expansion investment with the rate maybe from 17% to the 10% with the rate of the tax incentive, and tax exemption maybe from 2 years to the 4 years, and the tax reduction of 50% is from the 4 years to the 9 years. It belongs to the sector and area where the investor invest in Vietnam. And for the infrastructure investment, we also apply for the land lease exemption, like from 11 years to the 15 years to the even to the whole life of the project cycle. And the government also support for the IP investment in the infrastructure, like they can provide the soft loan or the grant if they invest in the infrastructure or invest in a wastewater treatment facility, so that we can meet our target for the by the 2020, 100% of the industrial park have the facility of the wastewater treatment in the IP. And as I mentioned in the past, our workers still haven't got enough the house. That's why the government apply for special height incentive for the housing project. If they build up the house for the worker, they can receive the highest tax, corporate income tax, or reduction or exemption, and they can receive the highest exemption from lease of land. Now I would like to mention some new model of the our IP and some orientation of the IP development in the next 10 years. The first one is right now we are focusing more on the converting the existing industrial park into the eco industrial park, and we also applying for the model with the not only industry but also for residential and service combined together, so that we can provide the best opportunity for the worker and best opportunity for the industrial with the service like the logistics or the residential for the worker, so that the people can work and living nearby, so that we can solve the problem of the people working for the industry but cannot have enough the house. And we also trying to develop the supporting industry park, so that we would like to make the best linkages among the enterprises located in the IP. And for the next 10-year development orientation, we will focus on more on the social and economic and environmental impact, so that we can bring the IP with the more social and environmental long-term development, so that we can have the negative impact on the environment as well as the on the social issue. And secondly, we would like to make more efficient use of the land, because that in the past the enterprises take the land with the very big area, but right now we would like to make it more efficient. Like for example, we provide opportunity for the enterprises within the IP to build up more storage, so that to make the land used more efficiently. And we would like to boost for more cooperation among the foreign investment as well as foreign international cooperation to build up the more industrial park or more model in the industrial development. And the fourth one is to make sure that the IP development fully comply with the plan of the, especially the land use plan and industrial development plan. And we also would like to revise the law and regulation regarding to the IP management, and as well as the more effective use of the IP, especially in administrative procedure, so that we can make the investor to invest more easily in the industrial park. And as I mentioned earlier, we also converting some old industrial park model into the new one, like the eco industrial park or the industrial park with the residential and services park, and the park with the more linkages among enterprise within the same industry. And seventhly, last but not least, we also would like to encourage the to receive more industry from the high-tech technology or cleaner production, or have the less impact on the environment, and especially use the efficient of the local natural resources, or high linkages with the global value chain, or the with the modern business administration in the IP. So that it is the end of my presentation. Thank you very much for your attention.